NoosaMining.com.au is out once again at the Noosa Mining Investment Conference. Standing next to me is the CEO of Metro Mining. We're here to talk all things bauxite. Simon, it is a pleasure to see you again. How are you?
Great, thank you. I'm very well, thanks, Shae.
Now, first of all, congratulations on Q2. You've just wrapped up a bumper of a quarter. But for everybody watching, before we go into the results, you set some pretty ambitious targets when I was up on site back in May last year. Talk me through why you set those targets and what you've just achieved.
Yeah, very deliberate target for 2026. That was always our culmination of the full expansion of the project at Bauxite Hills. So this year was always a 7 million tonne target for production. We're on track for that. That means that all of our supply chain, all of the expansion elements, everything that we've been doing over the last couple of years is all in place. And so, yeah, the second calendar quarter was 1.8 million tonnes, which after experiencing a cyclone at the very beginning of the quarter was a bloody fantastic result. So really happy with it. And that puts us on track for that 7 million tonnes. So second half of the year is always a lot stronger. So it's around about a 5 million tonne plan for the second half.
Let's talk about the geopolitical tensions happening in the background. How has Metro Mining been impacted with that, and how are you dealing with it?
Yeah, look, of course, the Gulf War is having an impact on a lot of elements of the business. I mean, primarily it's around diesel fuel, and we're obviously a strong, large user of diesel. To this point, we haven't really been impacted on supply. Obviously, the price of diesel has gone up, but for us, that's probably only about $1 or $2 per tonne. So in terms of how that impacts our costs of say our target this year is $30 delivered into the market. So it will affect that. But I guess the major issue is more of a global one that affects the freight rates in the market. Now, most of the bauxite that comes into the Asia Pacific comes from West Africa. They are a high-cost producer on the basis that their freight rates are much higher than Australian freight rates. So their freight rates have already gone up by at least sort of 60 to 70%. And that means that whilst Australia, there are quality differentials, that massive increase in their freight rate means that there will be an impact on price. Now, that price has already started to move up. So in the last quarter, we saw price from Guinea go up by about $10. That's probably going to go again by another $5 to $10 to be able to reflect that cost. And we're sitting pretty well because we took a decision last year to lock in most of our freight for this year. And so from that perspective, our freight rates are not changing. And therefore, not only are we getting that Australia West Africa differential, we're also getting the fact that as Metro, we have locked in those freight rates. So our cost base is going to be, far less affected by those geopolitical impacts on fuel.
That's such a positive outcome. But look, obviously you're going to have a big year. You've got those big targets that you're planning on hitting. What's ahead? What are some of the, those key milestones investors can look out for over the next few months?
Yeah, no, exactly right. There's quite a few share price catalysts that are coming for the second half of the year. As I mentioned, production hitting that, sort of 5 million run rate for the second half. We'll be talking, about that every month as we release our results. That will enable us to hit that $30 per tonne US target into the market. We know, as I said, we have our freight rate already locked in. We've also got a lot of currency hedging as well locked in, so that we're pretty clear on what that's going to look like. Corporately, we've also got a share buyback program that we've announced. Cool. We haven't yet started to implement that, mainly just to sort of see how the Gulf War was going to impact the market and the costs, etc. We're now much more comfortable about where that's landing. So over the next few weeks, we intend to start that buyback program, and also continue debt repayment. So we should be, by the end of this year, down to about $20 million US of debt. So our balance sheet this year is going to be, again, much stronger by the end of the year. So quite a few targets there. And also be aware, I guess, look out for news out of Guinea. The government there has said that they're going to put a quota on exports. That will also obviously have quite a big ripple effect in the market and probably send prices higher again. So look, those are probably the things investors should be looking out for.
Certainly, so there's a lot of catalysts coming that way and some prudent financial management as well investors should take note of. But I'm not going to let you go without talking about the rocks. This is bauxite. This is super cool. What are we looking at?
So this is
orange.
This is the cemented bauxite that we have on site. It's still a free dig operation. We don't need any explosives to pull that out. We then put it through screens and it tends to crush down. And what you can see here, the most basic element of the bauxite is what we call a pisolite. So that is a pisolite of bauxite. That is the sort of smallest. Effectively, that's about a 5 mil, 6 mil a piece of alumina.
Yep.
And so that is the most sort of pure form of the bauxite. So as we break it down through the mining and the screening process, that is effectively what we're trying to liberate in the product.
That's so cool. Listen, Simon, it's always a pleasure to catch up with what's happening with Metro Mining. Thank you for letting me play with the rocks, and I look forward to seeing you hit those milestones.
My pleasure. Thanks, Shae.